What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now I know that I've already posted a video today discussing some news that came out for NIO and some things that should have pushed NIO's share price higher, but yet today we saw NIO drop by quite a substantial amount compared to what we've seen in the past. So we're going to go over whether NIO could actually be delisted from US exchanges and how that would affect you as a NIO investor. Now this isn't only going to affect NIO, and it might not even affect NIO, but the discussion is towards Chinese stocks, which we know NIO is in China. But we're going to get into that and whether NIO could be affected by this new bill that could be passed tomorrow. But looking at NIO's share price today, they actually went down over 10% today. And the entire trading day, NIO was just continuing to go down, and there really wasn't much hope that they would be in the green today. Now in after hours, it does look like they are kind of starting to push back up, but they're still going to be pretty red even in after hours. And most of this is due to a sell-off in the EV market as well as in the Chinese market. Now if you guys saw Tesla today, they weren't really affected. They were actually in the green today, where these other companies like NIO, Li Auto, and XPeng, all three of them were affected by this news of Chinese stocks potentially being delisted from US exchanges. But looking at the 1 week on NIO, you can see they're down over 8%. And at the time when news came out about Chinese stocks potentially being delisted, that news actually came out yesterday and over the weekend. And so that's when we saw a lot of stocks dip. And you can see right around here, November 27th to November 30th, and we saw a pretty decent dip here from NIO. And then they pulled back even more today when more people were concerned about Chinese stocks being delisted. But to give you an even better idea of how much these stocks were affected, here I have Alibaba pulled up. And if you guys don't know what Alibaba is, they're basically just a huge online presence in terms of retail. And they sell a lot of items at a very cheap price that people can buy all over the world. And if I'm not wrong, I believe they also own AliExpress, which is huge for a lot of retail places. But you can see when we look back at November 27th, they were trading right around 276. And then when this news came out over the weekend, we saw them drop pretty drastically down to 265. And now since yesterday, they've been pretty flat and somewhat tapering down. So you couldn't really see the effect as much with NIO because NIO does go up when news comes out for NIO, where Alibaba isn't quite the same. And they don't get these big spikes like NIO does when a new price prediction comes out or something like that. So this is kind of just to show you how affected these Chinese stocks really are with this news coming out. But now to kind of go over what could happen with these Chinese stocks if they are delisted. Now we know there's companies like Luckin Coffee that got delisted basically because they were lying about their numbers and their revenue. And to kind of sum up what happened, they basically lied to investors. And so there was a lot of investors jumping in on Luckin Coffee. And then obviously they were lying about their numbers and the company basically went bankrupt. And the last time I looked, now they're basically a penny stock. So the reason for this new bill is to kind of regulate things like that from happening. We don't want people to be falling for another Luckin Coffee and losing a bunch of money. But tomorrow on Wednesday, the House is scheduled to vote on the Holding Foreign Companies Accountable Act. And this would potentially delist companies like Alibaba, JD.com, NIO, and some other Chinese stocks. Now on Monday, Alibaba fell 4.9%, JD.com lost 4.5%, and NIO sank 6.4%. So that's kind of to give you an idea of how much these stocks were affected by just this news coming out of a potential delisting. It hasn't even been confirmed, and yet these stocks are dropping quite a substantial amount. But this bill already cleared the Senate in May, and it could kick Chinese companies off the US exchanges within 3 years. So this is one thing that investors probably don't know, is that this would take a while to kick these stocks off the exchanges. I don't think it's something that would just happen overnight. And even if that did happen, you're still not losing all of your shares. You still have ownership in these companies. But we'll go over that soon and how you still own part of the company. But I want to kind of keep rolling here to kind of give you guys more of an idea of what's going on. So these companies would be removed from US exchanges unless their auditors would come under the supervision of the Public Company Accounting Oversight Board. Now the only problem is that Beijing has actually made it illegal for Chinese auditors to submit this kind of information to overseas regulators. They basically see it as an impingement of national sovereignty. So if you look at it from their eyes, that kind of makes sense because they don't want their information going out to other countries. But being from the US, we also have the power to regulate who can be on our exchanges. So there has to be some kind of a middle ground in order to allow these companies on our exchanges, but also keeping them safe for investors so people don't end up falling for another Luckin Coffee. Now this article kind of goes over it a little bit more in depth to kind of give you an idea of what's going on. So the main goal of this bill that's going to be passed potentially is to ensure that foreign companies traded in America are subject to the same independent audit requirements that apply to US firms. So we want these outside companies being regulated as if they were a US company. We don't want them to have the ability to lie about their numbers and then investors lose a bunch of money because they trusted these companies. And this bill would also require certification that these companies aren't under the control of a foreign government. So this could potentially put NIO at risk, depending on how much in control the government is of NIO. Now we know that the government does support NIO, and they're very much on board with the electric vehicle market, and they want to get rid of gas-powered vehicles by 2035. But at this current time, without certification, it's hard to say how much the government actually controls NIO. For all we know, the Chinese government could be in full control of NIO, and they could be lying just to get more investors interested in NIO. Now, I'm not saying that's the case for sure, it's just a possibility, and we won't know until there's certification out for a company like NIO. Now, the Holding Foreign Companies Accountable Act is going to be considered tomorrow on Wednesday under a streamlined process that limits debate on the House floor, and it also allows no amendments and requires approval by 2/3 of the members present and voting to pass. So this is pretty common to have a 2/3 vote. And this also does have to be approved, I believe, for anything like this to happen. And so if this doesn't get approved, we're not going to see these companies being delisted. And even if it does get approved, though we would see these Chinese companies drop just in fear of being delisted, they likely won't be removed from US exchanges for a couple of years in the future. And I'm sure there would be a lot of heads up before they are actually removed, so you could get out of your positions. I don't think it's anything to be worried about. Now, obviously, I'm not a financial advisor and I don't know exactly how a delisting works because I've never actually had to encounter that. So if you guys are worried about this, make sure you do your own research and look up what would happen if a specific stock got delisted. Now, I know for other companies that have been delisted, those investors still own a share of that company, and they just end up having to trade on a different exchange. But to kind of sum up what this bill would do and how companies would be affected, it says here that the legislation holds that if a company can't show it's not under the control of a foreign government, or the PCAOB isn't able to audit the firm for 3 consecutive years, the company's securities would be banned from the US exchanges. So again, that could potentially put NIO at risk, but it also really depends on how much the government controls NIO. If NIO is supported by the government, but they aren't controlled by the government, realistically, they should be able to stay on the exchanges. Now, again, I don't know for sure, but that's kind of my guess and what I think would potentially happen for NIO. And if you guys want to read through this entire article, you can pause it and read through this. I'm just kind of giving you guys the overview of what could potentially happen for these Chinese stocks. I don't want to go super in depth and read through this entire article and explain everything paragraph by paragraph. So if you guys want to read through it, go ahead and read through it. But for anybody who owns a stock like NIO or maybe Alibaba or any other Chinese stock you're concerned might be delisted, if you guys own shares of that company, you can still trade that over 2 different platforms, which are over-the-counter bulletin board or the pink sheet system. And although both of these are not nearly as regulated as major exchanges, the over-the-counter bulletin board is pretty strict, and it's still a way to trade these companies even if they are delisted. So you guys don't need to panic if a company like this is delisted because you still will own part of that company and you can still trade those shares. It's just a lot more difficult. The bigger concern is that if one of these Chinese companies is potentially delisted, obviously we're going to see the share price drop by quite a bit. And so the bigger concern here is to actually get out of your position before it drops down to a penny stock. Now, I'm not telling you to sell out of your positions of these Chinese stocks because we don't even know yet whether they could be delisted or not. But if you got the heads up that a stock was going to be delisted, getting out of your position earlier than later is better because then you won't see those big drops in the share price of that stock. a lot of times when a stock is potentially going to get delisted, they drop down and become penny stocks. And so even if a stock does get delisted and you can trade it on another exchange, you're probably going to be trading it basically as a penny stock, and that's not a good thing because you'll have lost a lot of money. So if you guys do get some kind of heads up that a stock you're investing in could potentially be delisted, you should likely sell out your position before it goes down to a penny stock, and then you have to sell it on a different exchange. Now again, I'm not a financial advisor, so kind of take what I'm saying with a grain of salt. But if I were in that position, that's what I would do if I was hearing about a stock being delisted. But again, going back to NIO share price, they've been pretty flat through after hours. And I think people are kind of starting to realize that a company like this isn't really going to be affected unless they're actually controlled very heavily by the Chinese government. So we do know that NIO is supported by the government, but it depends on how much the government actually influences NIO. So if you guys are invested in NIO, you shouldn't see anything big happen for a couple of years, but it's definitely something to keep an eye on. And if there is big news that a company like NIO is going to be delisted, personally, I would get out of my position as soon as I could. But again, there's no confirmation yet, so you don't have to sell or worry just yet. Now, for those of you who made it this far into the video, do you think it's fair to regulate companies like these Chinese stocks? Or do you think they should be welcome to be on US exchanges without regulations? Now, personally, I think they should be regulated. I don't know about how much, but I would hate to see something like Luck and Coffee happen again, where people invest thousands of dollars, or maybe they have their retirement or savings in a company like that and then they lose it all. So personally, I think there should be some regulations, but as to how much, I can't really say. So let me know what you guys think down in the comments. Lastly, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. When you sign up and deposit $100, you'll get 4 free stocks now. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.